Hey there. I thought I would talk about the markets today. So it's not looking too good. I've got a watch list here of the NASDAQ, the TSX in Canada, S&P 500, Dow Jones, and the Russell 2000. So we'll take a look at the NASDAQ. And I've got this line here showing a trend. We've kind of gone way up above it. It kind of curves when the price goes way up like this, like kind of parabolic almost. It's usually a sign that's extended away from the 50 moving average as well, which has a similar slope to the trend line that I drew. So we're right. This is pre-market, still pretty early in the morning, but it's down about 3%. And so you could see that that was going to happen. Like occasionally you get these little dips below the 8 EMA, and that, you'd be tempted to stay in. And you could also use the trend line, because it's staying above that. But the point of the 8 EMA is that you don't know what's going to happen once it breaks down through there. Like here it came back, right? So, but it's still above the trend line. So even if you got out and back in, it's not that much of a big deal, but it saves you from, continuing to make losses. So the other difference is that in this case, you had a big gap down and a huge down candle with with this candle here, hanging man. So there's some candlestick signals that indicate a reversal. If you want to learn more about candlesticks, I highly recommend Steve Bigelow. He's got a chat room which you can be in all day, or as much as you want, and you get daily stock picks and you get help with the information. He's also got some books. He's the kind of the guru of candlesticks. So sometimes it goes down, but there's not like a major signal. But this one is, there's definitely sending some signals here. So some things to watch would be if it breaks this trend line, and also there's a 50-day moving average, if it has support there, or if it breaks through that as well. You can also use previous highs as support. So these are kind of intersecting here the previous high, and there's other ones as well. So those are like support levels. I'll get into what you might want to trade in a bit here, but I'll just go quickly through the indices here. So same scenario, we have this breakdown through the 8 EMA. So if you're holding, especially if you got in earlier, and you see this close below the 8 EMA, with a bit of a gap down here and a gap up and then a gap down, you probably get out right there. So that would save you from further decline. So, there's a bit of a support here. If we scroll way back, there's this previous high before the crash. So that's another support level to check on. And then you've got the 50-day moving average and even the 200. So we're not sure, how far down that's going to go. It kind of started mostly more with the tech. Dow as well broke through the 8 EMA, and today we're seeing more decline. This gapped up a bit this morning and is actually down, but it shows here slight increase. So not looking good. So you can look at the sectors or ETFs if you want to potentially trade some things that would go up. So obviously the VIX is going up. That is the volatility. So we had a break through the 50, a retest, and then we're up about 5% this morning. From a trend perspective, we've broken the downtrend here, but to establish, a confirmed uptrend, you probably want to see a higher low here, so some sort of pullback and then an increase. we have kind of lower highs. We have one up here, one here. So we'd want to see ultimately higher lows, so higher highs as well. So we'd start to see breaks up above these ones here, this one here. So you could draw a line, you know, somewhere in the range of, so it depends how aggressive or conservative you are. There's not a confirmed uptrend reversal right now. You know, it still could come back again. So we'll have to see. But I mentioned in the last video, there are some things that are doing pretty good, like the copper and that. But I'm a little bit nervous with the whole thing. You know, the whole indices going down. Bonds, you know, there's a potential. We don't really have a good break. There's a bit of a break of downtrend, but we don't have, we do have a bit of a higher low here. But you can see these, this resistance here and the 50 moving average. So I'm not super comfortable right now, but there is a chance some of these things will start to pick up. But there's inverse funds. So you've got the inverse of the NASDAQ. But again, this is just an initial break. It's not really a confirmed uptrend. And you've got the 50-day moving average resistance here. SH is another one for S&P. So there is an uptrend. There is a, you know, a little bit of an uptick here, but it's not technically confirmed. But you can see the green volatility stops, like we're seeing a start of an up movement here. Dog would be the Dow. So similar, there's a little bit of a sense that it's starting. But you can see here that you get these little green sections, but they're not sustained at all. So you have lower highs and lower lows continuing. So it's not really a significant break at this point. If you want to look at gold, there's the mining stocks, juniors, and so this doesn't look good either. It's a bit flat right here, you know, depending on where you put the line. There's been a bit of a support there, but we're not in a great situation with gold either. So everything is kind of down. And so I would suggest just waiting. You could short some things, of course, and find little nuggets here and there, but we're not in a great situation with this. So we want to see what's going to happen at these support levels and the 50-day moving average and stuff. All right, we'll talk to you later. If you want to get TC2000, there's a coupon, a link in the description box below for a free trial or $25 off. And I've got the gold membership with a US real-time stock information here. Talk to you guys later.